Hey everyone, welcome back for those that have been viewing these regularly. And if you're new, then check out the educational section because some of the stuff I talk about might be a little bit hard to grasp. Um, Now we've been grinding upwards ever since we sort of landed in that monthly support, and I guess the big question everyone has got is, is this going to be a little bounce, big bounce, no bounce, continuation? Certainly when you have a look at online sentiment, there are people that are very extreme. So they're either completely bearish right now, and everything's going to zero, or they're like, no, the cycle's not over, and this is just a tiny little pullback, and there's going to be this huge bounce. So when we look at the charts, we'll probably get a bit of an idea about how things sit. But looking at liquidity, it's I said this in one of my previous videos, but if you look back to how these liquidity charts used to look on weekends, they were very much just symmetrical, almost like they were just completely painted and fake. They were just 25x, a block of 50x, a block of 100x, type leverage, and it just was exactly the same above and below price, over a weekend. Something's different now, and we've actually got what looks like normal sort of weekday market on trading structure to these liquidity charts, which is different. So what that means, don't really know. Speculation would be that maybe some bigger players are starting to look at 24/7, which I guess makes a bit of sense with a lot of stuff, with a lot of synthetics and things going online, but we shall see how that all works out. But yeah, so as far as the pump actually goes at the moment, I'm still pretty much cautious as soon as we get into that sort of high 88, 89K area for BTC. Mostly just because the minimum obligation for the monthly long is to hit about there, and there's never been a monthly fail. So it's but at the same time, it doesn't have to go anything past the minimum obligation, even though there are some other time frames. They're just much bigger time frames, and they could take a lot longer to actually play out. So I don't really want to rely on them as far as directional bias. So for Sol, 136, 137 is quite a key area. Closing over that today, if we do get some kind of last minute pump, would be extremely bullish, but at the same time, closing under that just still leaves us with a bit of uncertainty as to whether we're going to get another rejection. There's a couple of levels to the downside that I still think are just a little strange that we didn't touch them, and things like 119, 120.4. Markets are often very efficient. They normally test areas that have confluence. So if there's multiple reasons to go to one place and it can be achieved in a certain time, then it normally happens. So you imagine like a candle is restricted to just simply going up and down, and it doesn't have any control over time. So it's going to move from left to right as time passes, but what it can control is price. So if you happen to be above an area where there's multiple reasons to go down to hit it, and it doesn't go and take all those reasons, then usually there's something planned for the future. So I just I can't help but wonder if there is a reason they've got planned. Maybe Monday when New York opens, we might have our final big Monday sell-off or something, because they've sold off I think 9 out of 10 New York sessions now. People have been dumping BTC, so we'll see. As far as liquidity goes, though, yeah, it's definitely built up down to the 120s. It might also be the case that there just simply wasn't really anything worth wicking the price down there. Maybe that was part of it, is that they just wanted to be able to cascade it down, which means maybe it's going to have a strong bounce if it goes down that far. So certainly if it dumps down to that 119 level, we do hit a daily support. Likewise, daily supports tend to play out quite quickly. One that's so far on the backside of the range probably isn't going to fail. It'd be pretty unlikely that it fails. So, yeah, keeping an eye on it, to see if we do take some kind of sharp drop, and if we do, could be a very good long scalp in there. So we'll see. Looking at the 7-day, I think it's actually starting to even out, which is, I don't know. So the online sentiment, there's definitely a lot of bearish people, but just looking at liquidity, a lot of those bearish people seem to be opening longs. So whether they're saying one thing, doing another, who knows? Um, it's building up down to that 80K area again on BTC, and it's definitely into the 79s. And yeah, plenty of liquidity if they were to take it down to 119. The upside areas, they make a bit of sense too. That 93579, so 93570 is a key area for BTC as well. And given that there's quite a big block of liquidations to be had just above that, even if it was to sort of creep up to the 89, maybe it pulls back a little bit, creeps up. If it hits that 93570 area, it's a really high time frame resistance, and it might just wick up through it, then come back down and reject off it. But at the same time, they could take that liquidity to the upside if they just range its way up to there. And over on Sol, that would sort of mean getting back into the 140s again and so on. But let's have a look at the 30-day. Yeah, 30-day is showing up to about that 96 area, and 95, 96 is one of the possible targets as well. So pretty much anything above 89 is starting to get, well, I think actually technically anything above 88, 420 is starting to get into some of the bigger resistance areas, but there are plenty of reasons to go and grab that liquidity. And there's also a lot of the charts are actually showing failed distribution on the high time frame at the moment, which is also quite interesting to see. And it's not at all like the last bear market. The last bear market basically was just the price ranged down, closed closes, created distribution ranges, keep distributing. That's kind of how it works. Whereas at the moment, we've ranged down sort of one step, but we appear to be failing to actually continue that distribution. So, that means that maybe there is going to be we could be in a bear market, but the dead cat bounce might be soon if we are, or it could be continuation because there is some high time frame stuff that shows we have the ability to expand to the upside. So, all right, let's have a look at these charts. Okay, so we talked about this yesterday with Sol BTC chart. We haven't hit the resistance which on the daily, which starts at the 15654. But we had also never hard closed the break level, which was the 15164. Now, today we may hard close that break level. So if this candle closes in an accumulation, that will shift, a very old exterior trend, which started back up here in September when strength was basically up about that 21567. So right at the top of the pump, So if that trend shifts, it will be the first exterior trend break since we created a local top. The only catch is that if the wick stays this long on the candle, then it's going to open under the trend, which means it could reject. However, and this is where this gets pretty fun, if it stays above the body of the prior candle, so that means 15119, then it has a hold level to try and break the trend. So it may shift the trend, create resistance, create support, and then have a very tight little compression wedge where it has to break down or break up. So obviously, if we want to see a bullish close today for the strength of Sol, we want that wick to go away, and we want the body of the candle to be able to open on the top side of the new trend that gets created. And a bearish close would be that the candle stays yellow, funnily enough, but two bearish closes, let's talk about. If the candle closes yellow, moves the trend, but doesn't create this hold level, then the trend will almost certainly just push the price back down and break back down to retest one of these lower parts down here, like the prior trend, etc. The other, of course, potential bearish close is just that this entire thing reverses in the next 4 hours and becomes a blue candle, and then it's not a hard close, and then you don't have any form of breakout or hard closing on Sol BTC. Okay, so that's the daily. Now, there's one thing that is very suspect about this particular daily structure, and that's that they have not actually entered into this hold that's up here, as mentioned, at that 15654. So if it breaks the trend and moves up, even if it does that, it is effectively going straight into something that can push it back down under the trend. So having not quite touched that in this candle from the 20th of November leaves it open to be a little bit of a fake breakout. And if that is the case, the fake breakout would probably hit the resistance in the next day, which would be your Monday, and then it would push back down, and that could be, your Monday dump or sell off, maybe from Open of New York, or anything along those lines. And the other thing that's a little bearish about this is that we haven't actually crept back into this prior accumulation range either. So as you can see, that's been operating as resistance, which is that 15283 area. So yeah, until this really closes, you can't make a complete judgment call as to what comes next, but it certainly looks a little trappy, one way or another. It might appear to have a good close, but then turn out to be a bit of a trap for the following day. So if we look at the weekly, so the weekly looks a little better. At this stage, it's closing up above the trend, so that's kind of where you want it to be. It can use the backside of the trend to try and push up into the prior hold and the prior range here in the 1/6s. There is a hard close range trend, which is going to be about that 1/6 area as well. And of course, you've got the downtrend, which is also about that 1/6 area as well. So the daily looks like it could be a little trappy. The weekly looks like it could push up into resistance, which means maybe you do get a weekly bounce initially and then a pullback. So that's also possible. And the other thing in this, which is just a little bit trappy, is that you've got your range level here at 15630. So based on the range that was created here, and went up. Now it also stopped just before it touched that this week. So when they leave these tiny little areas untested, it's normally because they're going to reject or they're going to do something with that in the future. Because you can't actually qualify this candle as a retest of the 50% of this range, because it never actually touched the 50% of the range. So yeah, it might get back up over the trend, hit the 50% of the range, and have another dip. Now, then what can happen is, because we have hit the break level down here on the weekly, it's now a 50-50 chance we lose this range. So there is the possibility there we lose the entire strength range on the weekly, but there's also the possibility that it kind of does a bit of a liquidation event. So if the liquidation event means that the price pumps up, pumps down, or vice versa, so a dip and a pump, but doesn't for the next week touch the 14125 level, then this candle that's in here, this blue candle from the prior week, can end up becoming a new range. And if that's the case, it would take you all the way back up potentially to the twos, so that 20630, or that sort of area for strength. So it's got confluence with resistance levels lining up here, not so much that one, but it's got some confluence with at least making it back to the 18886 area if it turns that into a range. So, and you won't know that for another week or two. So yeah, that's where the weekly's at. All right, let's have a look at, actually, let's just quickly look at the monthly. Yeah, so the monthly is still in support. The monthly's minimum bounce is still to the 1/6s, and the 3-month has bounced off the trends. It's still in support. It's looking like its minimum. It never actually touched the topside trend, so it potentially, is still trying to work its way back up to the 1/8s and the 2s as well. This does not look. Funny thing is, this just doesn't actually look that bearish. So, based on where it is, it looks like it could have one more push to the upside. All right, let's have a look at these safety assets. Okay, so we have a blue candle. We're still rejecting off the range trend. It's gone back underneath. In actual fact, this might be the first break of the interior uptrend on the safety assets. Yeah, I don't think we've ever. No, we have not. This is different. Okay, so if this actually closes as a blue candle, it is the first break of that interior uptrend, because this prior one that was a pretty wicked candle, that was more of a liquidity sweep. That actually started on it, so it couldn't break it. This one that was here from yesterday started on it, so it couldn't break it. But this body is free and clear. So yeah, we haven't technically hard closed the 67.91 support level. It's amazing just watching this thing just go like jerking up and down as there's definitely a lot of implication to this candle and how this candle closes. But yeah, if it closes blue, so anything under 68.07, then it is not a hard close of support. It is a break of the trend. The trend will shift. The interior trend will shift to the bottom of it, which means it could potentially, because there's too much of a wick on the candle, so it could potentially have support. If this pulls back under the 67.91 level today, even better. But it could do that tomorrow, and then continue down. But yeah, it's sort of showing signs of potential little pop for the alts. Don't know if I trust it, but there we are. It might also just flip completely yellow by the end of the day. Okay, so the weekly really just couldn't be any more indecisive. It's not really shifting any trends that I can see. It's doing nothing today. It's just rejecting off the 68.47 level, which may need to come back down and try to find trend support. So it could go up and have another go at the level. But the prior week candle, I'm sort of disregarding this candle from October, just purely because there's something strange about that. It doesn't appear like that on every chart. And if that is the case, then last week was failed accumulation. This week is first touch of origin rejection, and then next week this should drop. So it'd be interesting to see if that happens that way. Okay, and looking at the monthly. So monthly's kind of sandwiched between the two trends. It's on the underside of resistance. Yep, so not too much there. Okay, let's have a look at the totals. Well, they're not making that so easy for us to read. So 2.66T is the level it needs to close over if it wants to try and create a new range to the upside, which would have a range top of about 2.9 trillion. It could also just simply be a 50% retrace, and that means 2.74 would reject and then give you the next leg to the downside. So it's just like, I know the price says that it's 2.66T, but there are decimal places. There are additional decimal places after that. So it looks just below the line. It doesn't actually have to do it in this candle, but it means that you'd have a whole nother day where you'd have to, close above that. And ideally you want a hard close up inside between 2.66 and 2.74 if you actually want proper continuation. It also hasn't retested the resistance level at 2.68, so it just looks a little bit trappy. Now we could flip this the other way and just check how distribution is going. So if we just look at this candle up here, yeah, so this is falling back into that lower part or upper part, however you want to look at it. So logically, a test of the number one level, which is 2.73, would make sense if it starts to creep back up into here. And it did hard close between the 2.63 and the 2.47 on the prior candle. So I also wouldn't put it past this being a trap move, and basically doing a double bottom. So that's or thereabouts. There's a break level down there maybe, but you've also got a trend which shifted yesterday, which is sitting about 2.53. So yeah, if this pulls back and closes under 2.63 for the day, it's probably going to dump back and do a double bottom, maybe a sweep through the trend, and then a bounce back up within 24 hours and potentially continuation to the upside. Because like I say, you can build a range with more than one candle. It doesn't have to be the first one that closes up over the level. So yeah, they might still be looking at doing a sweep of all these new longs that have come in. Yeah, could be interesting. So if they are going to do another push to the upside, I guess it would be this 2.73 level that they'd probably push to, and then could reject off that to start the trap to the down. So, but you can kind of see why the price has just been so heavily compressed. You've sort of got a distribution range at the top here trying to shut it down. You've got accumulation trying to develop and push back up. And when you look at this on some tokens, the gap between the two levels, like one where it goes up and one where it goes down, is just like a couple of bucks. So it's quite frustrating price action. Okay, let's have a look at the weekly. Okay, so the weekly has bounced off the 2.58. It's bounced off the range trend, which was down at the 2.47. And the weekly should still be trying to push its way back up to those trends and to this 1.68 level at 2.82. So the weekly still is holding. We actually have not lost the weekly range, which is quite. So this is the type of thing which makes you lean towards the bullish scenario, where a lot of people would be bearish, a lot of people will be bullish, but you haven't actually lost the weekly range. So it's until we lose, and unfortunately, it can go down a lot more. Like you'd have to be below this 2 point, where are we? 2.24. So 2.24 is the original level of the range. That's what started it. The first blue candle engulfed by these three candles became the base hold of the range, and then basically we were ranging from there up through the levels until we hit the level 4, which is where we rejected, which was up around that 4 trillion. So as long as we do not lose 2.24, this is a very deep retrace, but it is still a retrace. It is not a change of weekly trend. So yeah, it's that's all there is to that. Okay, so and then looking at the monthly, same thing applies. The monthly range actually is even lower, starts all the way down here, and this is again one of those sort of maybe bullish scenarios. So this weekly level in here is the one that's sort of bouncing back up to the 2.73. Now, if we actually look at this from a range perspective, and this is why the price action lately has been so strange, we did hard close the range up here at 3.34. We then didn't retest the 403, and then we just dumped. And we dumped from on top of the range, and that just is strange. You know, it's the weirdest kind of price action that you'd sort of expect to see. Now we have 7 more days to go on this. We're on the wrong side of the monthly trend. However, if in this next 7 days we end up pulling this candle back up, then it is very, very likely that it's going to go hit that level at the 4, and that would actually be a higher high. So it is possible that that can happen, and this is where it's a wee bit different from prior markets. Is if we look back at this monthly level down here, this is rejected at 3 and hasn't gone to the 4 as well. So even this as itself hasn't really gone to the top. And then if we come back and we go all the way back and we start looking at this one, this hard closed over the top of the range. So once again, we've got a lot of reasons for this to actually continue, but they're just really, really high time frame reasons, and they're not the kind of thing people are probably looking at. But it's certainly got me a little skeptical because, like I say, there's a lot of people very bearish and there's a lot of people very bullish. They all have their own justifications as to one or the other, but I just do not think these charts have made up their mind yet. I think there is the potential that they could go higher, and likewise, if the month closes under the 1, then the dead cat bounce might just simply be to the next candle hits the underside of the 2.92 and then drops, or it could come back up to test the 3.34 and then drop. But generally speaking, you would see the 2 being the level that gets hit, and whichever way you look at that, if the 2 gets hit, it's actually a higher high. So strange price action. All right, let's have a look at Sol. Okay, so Sol on the daily. We'll just clear all this for a sec, and what we'll look at is look at this. So number 1, we've got this distribution range. Now, it has not made its way to 120.8, which is really where it should have made its way, but it stopped just short, so that's a little bit strange. But unless it actually closes under the 120.8 in continuous distribution candles, then distribution has failed. And what's happening is that the price is actually starting to accumulate. And that then means we come across here and we look at this candle. And first thing we have to do is we have to look back and see, was there some form of origin level that created this? And that's where you sort of come back in here and you go, well, like, you're kind of clutching at straws if you're trying to find one, but there is one, slightly above it, which would be this level here. Okay, so when we lost this 130.587 level with this hard close, we should have dumped. We really should have dumped. But it didn't. It sort of, as you can see, stopped. It found support on the reverse side of the trend. It started to move up. If this 130.587 origin level creates a hold and closes over 132.850 today, then it is possible that this is going to try and start a daily range back up to 147. So it does seem like your distribution is failing and accumulation is definitely trying to kick in. Now, if it does just a retrace and then a dump, so that would be sort of like, a 50% move up and then down, that's probably going to hit this 137.6 level and then reject off that. If it flips bearish pretty much straight away on the new day, then 132.850 could be resistance if it doesn't get back over the top of it. So it's there's definitely reason to be looking to the downside, but at the same time, it is looking kind of okay. If at any point by the end, well, not at any point, but if by the end of today this thing actually flips to a blue candle, then guess what? Total fake pump, and down it goes. But yeah, that's what I'm kind of looking at there. We've actually created a new origin support level on the daily as well, which we haven't tested, which is that 123.457. So we hit the break level on Friday the 21st. We failed to distribute back to it on Saturday the 22nd. We're going up, but we haven't tested it. So maybe we do get a dip back and a sweep of it in a test, or maybe we don't. Maybe it is actually reversing, like properly reversing. So we'll see on that one. Let's have a look at the weekly. Oh, sorry, the 3-day. So the 3-day close, anything above, where are we? Anything above 130.930 doesn't create a hold level at all. It's a bounce of a trend. It's a bounce of a range trend. It's not high enough up to be on the correct side of the downtrend, but it's which means it could open tomorrow and have a dip. If it keeps pushing, through to the end of the day, it may even open on the top side of the downtrend, which actually starts to escalate what you're seeing on the daily. Like the daily is already over top of the downtrend, and this could potentially open on top of the downtrend, which means the 3-day is actually escalating from the daily, and it sort of justifies reversal. Then if it doesn't go back to the 123.436 level in the next 3 days, then that means your daily origin level is becoming a 3-day origin level, and it's becoming stronger support. So yeah, it's looking potentially bullish. We'll see. As far as 3-day range level goes, if it closes over 136.439 today, then you could potentially be quite bullish on that. And the next level in that range, so that would mean that it has not lost the prior 3-day range, which it hasn't lost the prior 3-day range anyway, because we'd have to come a lot lower to do that. I think 108, somewhere around 108 is what's required to close under that to lose it. So it may be starting to form a 3-day range inside the 3-day range, in which case, if it closes over 136.439 today, you could possibly look at it heading up to that 156 area. So it's very, very, very bullish. You just don't know whether to trust it because it's a Sunday, right? Okay, looking at the weekly. Now the weekly could close under trend. Now, if by some miracle it gets over 141.350 today, then this is just the world's biggest fake out, and this thing's probably going to moon. But if it closes at a blue candle, it's not actually a bad thing because it shifts the trends to the bottom, and it gives it something to bounce off to actually attack the upper levels, which are being hard closed. So, but still do keep an eye on these levels that will be hard closed today. So 141.350, 147.652, and 161.041 will all be hard closed, no retest done origin resistance levels. So just bear in mind that could be it as far as if you do get a bounce. 141, 147, 161. There is a lot of confluence on that 161 on higher time frames, things people probably aren't looking at, and I just get the freaky feeling that because there's so much obvious stuff pointing to 177 and above, just can't help but wonder if there's going to be a tricky game where they go up to maybe the 161, 164-ish area and then have a decent pullback off that. So looking at, okay, so the 2-week closed today. So here comes some of that confluence. The 2-week close today is probably the worst close, out of what we've seen so far. But that being said, it still hasn't hit its origin level. It still hasn't hit break level. It's not actually losing the range, but it is closing under 147 and 163, which could become resistance levels, and it's not shifting the trend. So, it's probably the worst close out of all of these. But even if it went up and tapped these resistance levels, that would kind of be confluent with what you're seeing, retests getting done on the weekly. Okay. And then we move into some of the really big stuff. So the 109, if it closes above 139.7 for the day, you could arguably get very, very bullish. What could happen from this close is we could see a 98.5 sol after it pushes back up. Now, it will also shift the trend today, so the trend moves to the bottom, and where it currently opens, the next candle is so critical, and it is right on the line. So even if this just comes up like $1 more before the end of the day, like close at about 133, 134, then the next candle actually could end up opening on the new trend. Now, if you really want to stuff a hold level and reverse the price and catch everybody out, what you do is you don't engulf the wick, you don't come to the 1618, and you open on the top side of a new trend. And then when everyone suddenly goes, oh, the price is going to go down, the price goes up. So this is potentially a real trappy thing, but actually a trap for shorts, not a trap for longs. So if it opens on top of that trend, it could have a pump. And that hold level, like I say, it hasn't had enough distribution past it to really be classed as a strong hold level. Okay, so 23 week, very similar sort of thing, but potentially under the trend. So that being said, hasn't got below the wick. It's already tested the body. Yeah, this actually looks like failed distribution as well. 1 month. So the 1 month is below the 1618 level. So we want to see the 1 month close back up over 152. If it closes back up over 152, you can pretty much, I'm not going to use the word guarantee, but you can definitely say the probability of going back to 190 is really high. So that's the 1 month. And I showed in the Discord the other day an example of how sort of time capitulation works and how a lot of these rules can be bent, but they have to, eventually they really have to look at following some kind of rules of structure. Otherwise structure just doesn't work. And you can find the oldest chart in history and you can measure out the structure on it and you can see how it plays out. But when you look at a closed monthly candle, you don't know whether that candle spent 29 days down and 3 days moving up, or whether it, or vice versa. You just don't know. So when you look at it and analyze it from a lower time frame, what you tend to find is that some of these candles that have big wicks to the bottom of them, like this particular dump one here, that the candle might have spent a long time down here and then very short amount of time going up, or same thing in reverse. Sometimes they spend a lot of time at the high and then they very quickly dump down, and that's just trying to trap. They push up through resistance, they spend a long time up here, and then right towards the end of the candle, down it comes because it had to close under the resistance. So that was, those kind of things can play out. Meanwhile, what's happening is everybody is getting very bearish and they're all basically just selling their positions, when ideally they should wait to see how it closes, because if it closes under the key levels, then it could reject and go further down. If it actually creeps back up in that last day, everyone would feel a little bit silly for closing their positions. So that's sort of and structurally, the top side here, it never tested the wick or the body of the whole candle. So if you move into a whole candle first, you target a trend. If you go to a trend first, you tend to target a hold level. This never did what it should have at the top, and it's not doing what it should now off the bottom. So it's sort of says to me that somewhere in the next couple of days there might be an announcement. This thing could pump up. If it closes over the 152 level, it could bounce from failed distribution because this would become support, and it could bounce from the trends, and it could come back up and it could target these higher levels. So just if you see it start to happen, you could believe it, rather than disbelieve it, which a lot of people will disbelieve it. The other thing I find very weird about this is that it didn't come and tap this 120.487 level, and it just stopped ever so short, a dollar short. And because we've got 7 days to go, this could be that final sweep. Maybe what it's going to do is it's just going to have a dump, sweep, and pump, and that it could be that could be the final thing that they're just waiting on. And once there's enough longs in there and everyone's feeling comfortable again, they might just go and tap the 1 month origin level there, or sweep it. As far as what I'm doing, I'm just keeping my positions nice and small, just taking trades on the lower time frame ranges, stuff like that, because you just can't really, you don't know when they hit that level whether they're going to go, $20 below that level, or whether they're going to just tap it and fly, so either one. Wait to see what the reaction's like. Okay, or do they bring it down in the next 7 days, close under it, and use it as, use it as resistance to push down and hit to it, hit your 89s, and down it goes. So yeah, don't know yet. We'll see. But there's your bullish case, there's your bearish case. Either one can happen. All right, let's have a look at BTC. Okay, so BTC on the daily, there's two daily ranges that are really, really, really close together, which sit back here in April. And if we look at them, they kind of roughly have very, really, really similar levels. So this 82 sort of level down here, that was kind of the final step. If we closed under that, we would have lost it all. The base of the ranges are about 155, or sorry, 85.355, right, or 85.162. Now we're definitely up above those, but we also hard closed under them. So this is again very strange price action. Like, part of me is expecting to see this candle just flip a 180 in the next 3 hours and dump. The other part of me is going, well, maybe this was the fake out. We have created an origin level here, so we've gone through a break level, we've failed to distribute back to it. It looks like it is the start of a accumulation range, but it's going to be an accumulation range inside two existing accumulation ranges, where we may just hit the 89 area and reject. So because we literally hit the hold at the bottom, we now might just go retest that 50% mark, the 2.618 at 89.3 or 89.6, depending on which range is in control, and reject from there, and we could lose the range. And then you might see something with the 70s in front of it. Now, the other thing that I'm watching is the range within the range, okay? So for us to create a range within a range, we need to close over 86.880 today, and then we need one more day of accumulation. So it can't have a fake Monday New York dump, blah, 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 because that would ruin us from actually being able to create this range. Now, if we do get that accumulation hard close over the 86.880, it's then going to try and push up to 93. So that would be the top side of that range. It has good confluence with hitting break levels. It's got sort of confluence with the hold area, but the hold area is a bit of a weird one because the wick's so big. Now, if I flip it the other way and look to see what the daily is doing, so our daily level 1, which is basically the level at which you just cannot lose on the distribution, is also around 89. So you can see how 89 is such a key area. The distribution either fails if we end up closing over 89, and the accumulation actually succeeds and continues if we end up closing over 89. So it's just it is without a doubt one of the key areas, and it's no surprise that it is the monthly minimum retracement as well. So it's that would be the area where I would be saying, okay, well, we will probably make it there, but will we make it further? Don't know. It's so critical. It's hard to say what will kick in when we hit that area, and whether or not there'll be, just mass FUD suddenly appears, or the other way, we could see, Bitcoin adopted by Federal Reserve or whatever. Yeah, who knows? Who knows? All we know is it's an important area, and if you're in a long and you're in profits, take some there. You can always re-add it if it hard closes it and continues to the upside, but you can't take your profits at that level if it rejects and ends up going lower. So um, other than that, there's not too much to be said for the daily. Keep an eye on the 89. Okay, if we look at the 3-day, well, the 3-day is bouncing off a first touch of a range trend. So this is a very strong range trend. So when a range trend gets created like that, it's spent a long time not going back to it. Now it's hit it. It's a break level, which is not ideal, from back here, because you don't really want to be touching break levels if you can avoid them. We haven't hit the origin levels of the 3-day range, and we probably, and surprise, surprise, the minimum bounce off the 3-day range is 89. So everything's pointing to 89. Now, if we get a close back up over 89 today, once again, you've got resistance above, which is going to kick in the 90s. You've got 96 would be your next range level if it closes up above there. And your hold level and your range trend, which is where the range trend is going to want to target, is up here at 101. Okay, so it probably just cannot do that in a straight line, just purely because you've got a downtrend you'd have to break. You'd be on the wrong side of an uptrend, which hasn't technically been hard closed, but we haven't seen much bullish price action lately on BTC, and it is kind of easy to fall into a trap of it's been bearish for so long, it's just going to stay being bearish. But, when a trend is not hard closed, it's 50-50. The price can go straight through that because there is no hard closed blue candle under that trend. And that is what you get in a bullish market. You get trends that the choice of the 50-50 is to not be resistance. The choice is to be recovered. But when you get a bearish market, the choice of the 50-50 is to reject. So you don't know what's going to happen when it hits that. What you do know is the downtrend is resistance because it's hard closed. And it's in that same sort of area. So you'd have to say that the probability is that you'll get some kind of rejection from up in there. Can it recover it? Yes. Can it go down for a little bit, up for a little bit, open on the next side of the trend and keep going up? Yes, of course it can. So, the key thing is to get back above 89,367, because then you are back inside the range and the price will then want to try and come up to these higher levels. So that's the 3-day. If we look at the weekly close today, so it's hit the hold candle at the bottom, it's gone through the range trend, it's retraced back up above the trend, the range trend from the hold. This is quite bullish price action. So this is a trend dive. So this is when you're in a bull market and you really know you're in a bull market, you just put orders on these hold levels that are below the trends, because what happens if they ever go down for a sweep is they go down, they sweep the hold, and then they retrace back up within the period of the candle. And that's exactly what is happening right here, right now. So it's spent a long time down here, people getting capitulated, they're selling their positions, they think it's all over, and then it starts to go back up on the last day, in the last 4 hours of the day. So if it opens above this, yes, it could take a little move up. We do have, what do we got? We've got resistance that could be there at 90.7. We've got the 88.5 level, which could act as resistance. It could push back down a little bit and close under the range trend and just have another dump. so there is possibilities in here for this to go either way. But certainly if it actually gets back up over that 88.5 level by the end of today, then you could say that's getting actually very bullish, and then you'd almost at that point want to look at the 89 level and maybe say partial TP, and then look at 95 as a potential target. So because closing back up over the 88.5 technically means it's trying to bounce in that range level and then head up to the 95. And if it hits that 95, that's cleared out that 30-day liquidity chart we looked right at the start. Okay. Let's see if we can find a bearish one. All right, let's find a bearish one. Okay, 2-week. Well, no, the 2-week's bullish. So the 2-week is breaking the topside trend, which could induce a retest. Yep. Not going to lie, that means going up to 117K. It has not hard closed the topside range, so it could even just go back up into that if things turn bullish. So that's 50-50 resistance at 99.5. It's failing to close under 86.523, or if it does, then it's not only back above that trend, but it's also failed to create a distribution range. And naturally, then what it's going to try and do is target 101. So I don't know. What can happen in those 2 weeks is that it can go, cool, I'm going to go up. People are looking bullish. There's heaps of longs. Let's open a position. And then it can dump through these longs and then come back up in the next 2 weeks. So it can do that, right? And so you've always got to be wary that if the price is going up and the major players have not built their positions, they're going to wait for you to long, and then they're going to sweep into it, and then they're going to open their positions, and then they're going to go up. And that's why, like, it's really easy to look at charts historically and go, oh, cool, I can see how that all worked. But like I say, how it works in real time, in real life, is that, the wick of the candle was often the big players opening their position. The only question we've really got is it to come, or was it this wick that already went down before the price has started to move back up? That could be them opening their position, or maybe it's going to recover, dump, and go. So that's, but yeah, as it stands, that's actually a bullish close on the 2-week for BTC. Okay, 1 month. So if we look at the greedy part of the 1 month as just a pure hold level, then we're looking for this bounce. As soon as it went below 89, we were looking, 84.299, we were looking for it to come back to 89, okay? And so that candle seems to be grinding its way back up to that 89 target at the moment. For it to be range bullish, we need to see it closing a month back up over 94, okay? But 94 is a hard closed level, okay? And yesterday I was talking about just taking trades on 15-minute and 1-hour charts just every time it bounced between the range levels, and that was pretty much the entire day playing $1 moves on Sol. But this is just a really big version of the same thing. We hard closed up here, this 94 level. We've dipped all the way through it. Coming back up to there is actually just a really natural thing to happen, and that's up to 106. Okay, so the thing that's unnatural about this BTC price action is that we didn't hit the trend. So normally, if you dive a trend, you hit a hold. If you dive a hold, you hit a trend. Okay, so in this case, we didn't, which actually kind of makes me think that we might get to our 89, and then maybe next month, maybe this month, hard to know. We might get to our 89, and then we might dive down to hit the trend again, and then move up. So it does look like it wants to move up, even on the monthly, but it looks like it's got a little bit of unfinished business, down here. Okay. 109 day. So I'm looking at this as relatively positive, but also potentially that we could get that dip. So same as what we just seen on the monthly. If it closes above 85.047 today, it does not create a hold level. Now, if it doesn't create a hold level, but it's on the wrong side of the interior trend, it may then on that next candle want to push back down and double bottom. So 80, 81, it could sweep the trend. That's possible. If it sweeps the trend, it could come down to the 72 level. So just be really careful of that. The 72 level is hard closed. The higher levels are not. Okay, so it is possible that sweeps the trend to 72 and then has a bounce. So yep, that's potentially, that would catch everyone by surprise, I think. All right. And then we're getting our first trend on the 23 week today. And as you can see by the price, it's just right on the line. So they're really not telling us what they want to do. Like if we put a horizontal line here, and you just look at where current price is crossing over that horizontal line, as you can see, it's on the wrong side. Okay, but if it was to go up even just a fraction, like an 88, even an 87.988 close, then it's on the top. So it's a very hard to say whether that's going to go down or up. But what it isn't doing is it hasn't closed below the 1. It hasn't closed below the 1618. It will be introducing some kind of resistance at 98. But if it does end up with that trend support will try to break that resistance. And so it may not be that bearish, but it does need to sort of close just even. It'd be great to see an 88 close, but even just an 87.9, even like $500, $400 higher than where it is now, is actually on the right side of that trend. So it's yeah, it's interesting. All right. I think that's us for today on those. Kind of a long video, but it's a Sunday and it's a beautiful day outside. The sun is just shining through the windows, and sipping coffee and looking at Sunday charts and thinking about what holiday I might take next month, maybe. Let's have a look at, have a very quick look at TSLA and just see, not that it does anything on a Sunday really, but just for those who haven't watched the previous videos. Yeah, so nothing's changed. You're just looking for a daily open above the range trends or above the downtrend, or preferably above the support trend. So any kind of open 400 and up is quite bullish, and 394 is medium. Below the 390 area is kind of bearish, and it's still bouncing on that weekly trend. So closing under or opening under, based on how stocks open and close. Opening under that 390 could just reject off the trend and keep traveling down. Opening above that 390 might send it back up. It is hard closing under the 1618, so I would be a little bit more aimed towards bearish on this. The trend can stop the distribution, but hard closing under the 415 level with a blue distribution candle is not absolutely ideal. So you need to see that moving up. Okay. And MicroStrategy. Just a quick revisit, just if you knew and you didn't see this yesterday. I have to refresh that chart. Yeah. So MicroStrategy is just sitting on key support. I mean, I guess the way these things work, if Bitcoin bounces, MicroStrategy probably will too. But yeah, it's on a 3-month support, and you'd sort of expect this to come back up to 219 or 292. But yeah, just when. We shall see. All right. Yeah, that's all for today. We'll like and subscribe, and we'll see if this bounce kicks us up to 89 and however high Sol goes on that. And then we'll see if Monday New York market opens and whoever is selling off continues to sell off or not. But yeah, all signs are not pointing to bear market, unfortunately. If they were, then we'd just be opening mega shorts. And yeah, we'll see. All right, catch you later. Bye-bye.